Good evening. Welcome to Options Tender. Happy Tuesday, everybody. Thanks for joining us here. If you're new, go down to that bottom right-hand corner, hit that Options Tender logo and subscribe. Don't forget to like the video. Thank you so much for all the support we've had. I haven't done a video in quite a little bit. Usually they're about every day to every other day, but I took this time. We've basically been sideways for almost 3 weeks, so took the time to kind of pull apart our oldest son's engine and get to changing some valves. But anyway, it's neither here nor there. We've been kind of moving sideways. We still have the high in from after Powell's speech. CPI, we've been going sideways. I just think that price action is looking for a catalyst from FOMC. I think that's the gist of it. And so that's coming up tomorrow, 2 p.m. for the announcement, and then the meeting's at 2:30. So until then, I don't think we're going to get too much price action. Today we had another dip and then was bought into, but really we're just going sideways. So let's jump into it. We're going to focus on SPY. And towards the end, if the video isn't too lengthy, we'll check out a couple other indices, but I'd like to look at the VIX as well. I'll show you that price action. Okay, we have SPY on the monthly time frame. We're going to go top down to the 65-minute. Right here, we have a much more narrow range candle than we've had this whole entire move. Nothing but green so far, but nothing that's telling us that there's a reversal at this point. So we do have divergences. I'm not going to show all the indicators, but we have plenty of divergences, but they're not confirmed here on the MACD. You need a rollover for that to happen. We have higher highs and lower highs here in the indicator. Same with the RSI, and so on and so forth. And that's happening on all time frames. So I'm not going to waste your time with pointing out all of those indicators. So let's move on to the weekly to see if we can learn something else. I like to look from the top down to get a visual of what we think's happening. That's what technical analysis is. It's a visual of the pathway that we think that the price action's going, and clearly where supply and demand is, and also geometry. So, and there's a lot of ways to do that. Well, right now we're kind of focusing on traditional technical analysis, patterns and candles. So we have the weekly time frame. We have our former high here. I have those marked there. I do think that we're going to come back to test these areas here. Now, I built this channel. We'll look on the daily time frame more of what I think is happening, projecting a pathway to price action. But I put this channel on here to look when we do start to get our reversal, to see where price action might end up. You know, you have their 50-week right here, but I made a channel because there's a possibility that this area holds and we see new all-time highs there. That would be our alternative point of view. But we have a nice consolidation area here where you see the huge monthly candles, massive moves down, massive moves up. I mean, that was wild. And that creates this pocket here where we have support, once resistance, and support also resistance in previous price action as well, here as well. Okay, so this channel is just to give us a view of where we might end up in the future. But so far we had a couple of, I would call these tweezer tops, a couple of doji candles of indecision, where that's either a consolidation and a next move up or a potential reversal. But we have to get underneath this candle. The low, I'm pointing at the candle, and then you'll see the lows, highs, open, high, low, close. You see those there. So the low is 508.12. break underneath 508.12 tomorrow or into next week, and we're looking at a confirmation of reversal. So far, we don't have it. Let's go ahead, and I do think we had some DMARC values sometime. So we had the 9 count right where we're getting the reversals here, just indicating exhaustion. So we had a 9. You notice back here on this reversal up here, you had another whole week where price action had a top, a reversal, and then the week after had the confirmation. So the 9 being right here, actually this larger candle here, and then you had 2 weeks above it. Here we have the 9 here, and now we have 2 weeks of price action, and perhaps we get the reversal here. We'll see. Let's go down to the daily time frame. Trend is our friend. Now, what we have on this time frame, again, there's a consolidation area. So I do suspect after breaking this rising wedge, which we have already, I do expect price action to bring us down to these levels. Now, we have the channel here, channel top here, and that connects the bottom point here, the bottom point here, the top of this this bounce right at the top, and to the top that we had here. In confluence with this expanding wedge pattern. And that's exactly what we're looking at. And I'll show you that in just a second. That top there in confluence with this smaller wedge. We have these tops here as well. I do think the top is in. Can price action go back right up to these trend lines again? Sure. Maybe we, after FOMC, price action goes right into those levels and we get a mean reversal afterwards. I'm not playing it that way. I'm already short. We have hedges in the near term, and we have our long-term swings headed to the downside. We took profits into the first dip, and we're hedged right now into FOMC. But I am playing this as a reversal. We're underneath the wedge here. Broke down, back testing, and looks like it's back testing once again. And I'll show you some other levels as we get to lower time frames. And look how this top is. You know, a lot of times we'll get price action just kind of topping out a process. For this top's 1, 2, 3, 4, 5, 6 days. You know, look at this whole process here. We never really got a top. I wouldn't call that, but price action consolidating on top here. We're just consolidating again at this point. Have we broke down? Not really. We have probably about this level, let's just call it the 510 level, just underneath. That has to break down along with this 20 simple moving average. And then I would say there's a little bit more evidence that this is breaking down at very minimum to test the 50-day moving average. And we'll probably get some sort of bounce off of this and head lower. Okay. On the daily, we want to show our expanding ending diagonal. This is our primary count. This is our primary scenario. This is our expanding wedge. For all of you that are new here, we've drawn this up quite some time. I never, ever would have predicted that we would have hit the top of this wedge. I wasn't sure that was possible. We did. We did, and I think that's almost a once, I don't want to say a once in a lifetime, but once in a great while, months to sometimes even years, when you get this sort of opportunity where you confluence with an expanding ending diagonal, which is a blow off top, where each leg starts to expand more and more, where momentum expands. So leg one, and these are all 3 waves. In an ending diagonal, you have 3 waves, 5 sets of 3 waves. for ABC for 1, ABC for 2, ABC for 3. You see momentum is expanding. Price action is expanding. 1, 2, 3 waves down for 4, which is larger than wave 2. And finally, just this massive move to the upside where we have an ABC and right into this 127.2% extension from the top of wave 3 down to wave 4. That is the extension from that move there. That's a huge target. Massive. And just happens to coincide with the top of this wedge. And precisely in the time frame from a top to top to top relationship with time and price. It doesn't get much better than this. Can price action ignore this? Sure. But this is one of the best setups that I can ever offer you. All right, so we're looking at some time. We have some time frames here. I do expect price action to reverse after FOMC. I don't think the price is waiting for anything else but FOMC. We already had all the data dumps, the CPI, the PPI, Fed speak. And I know Friday he's speaking again, but I think we're going to get a reversal. I think we're going to enter into the area I was talking about, this consolidation area. I think we're going to get into that zone, have a bounce, and that's where we have to pay attention. Does this bounce continue to new highs? We have a scenario for that. Or does it break down and continue? That's our primary scenario. And this is going to be a busy screen here. But this is a lot of price action that I pay attention to with time ratios and clusters. So just pay attention to the line, the projection line. In this scenario, we also come down into this price action. That also includes this top here. That's in this scenario, this would be an ABC for a 1. That's a much larger one. It's larger than wave 3. So we have an ABC for 2, ABC for 3 completing, an ABC down here for 4. And I would expect that we cross over wave 1, 4 crossing over 1. This would be an ending diagonal. And then an ABC for 5. And I'd be looking for that wave 5 to complete. Now, I think this is a confirmation if we get over the highs that we have currently. We get back over those highs, and our next target here is that 162 extension around the 560. That's around the 560 mark. That's incredibly bullish. But, anything can happen. I didn't know that this would happen. So we have to keep ourselves safe, our account management, our vision. Just know that this can continue to go all the way up to 560. Do I think so? No, but we have to keep that in mind. Keep an open mind. That's what I was trying to think of. Sorry. We'll look at some of these clusters here coming up in the lower time frame, but we do have 319, that's today, and 320, small cluster here, three different time ratios right where we are right now, and so that may be an important area that we're getting into on the daily time frame. Now let's go ahead. I've spent a lot of time there. Let's go down to the 65-minute. Start off with traditional technical analysis. And again, we had that confluence up here where we had our rejection. We still have the top in. Top is in. This is the trend line from the lows, broke down, back test, and we're just holding. We're holding price action, and really we could just draw this into a triangle. we draw a downtrend line here, and perhaps you can kind of draw this sideways, really, as a descending triangle. But either way, it's a consolidation sideways at this point. I do think price action's in the making lower highs at this point, but we broke the momentum line, we broke the uptrend, and I think that we should see some sort of reversal overnight and into FOMC, and I think price action should accelerate to the downside. If we do go up and we start breaking this downtrend line, I imagine we'll make it up here. We'll have to extend out the trend lines and such, but I do think we'd probably overnight after the FOMC make it about to the 520, 522 area, somewhere about there, and that'd be another objective short. So we'll keep an eye on that. But this is the important part, the consolidation zone, break above, and you may see some action up here, break below. And this is limited, okay? Once again, if we get up here, there's such a limited place. You have 40, it's about 4 S&P points away, not much for the SPY, okay? 40 if you're looking at the SPX or ES. And then if we break down, then I think we have a long way to go. The risk reward here is substantial, to say the least. All right, and to close out somewhat the end of the video here, I do want to show you VIX, but we have that 127.2 again. That's at that zone here, that target that we got to. We still have the high back here on the. I do think it was it doesn't really matter, the 8th, I believe. Sorry, I'm jumping around here. 12th, the 8th, yeah, somewhere around the, yep, it's the 8th. Okay, so here is our count on the lower time frame. We have a 1-2 setup right now. That's very bearish. And if and when we get this reversal, it should be a pretty trendy move down there. And just remember, this tight price action is going to probably mimic down here at the wave 3 when you get down to, for example, the wave 3 and 4. We'll look at where our lows are. We have different days of clusters here, so we might make some sort of minor low or major low eventually towards these points. But once we get our 1, 2, 3, it should probably get pretty sideways and drift a little bit lower for wave 4s and 5s, kind of mimicking what's happening with the wave 2. And they should be pretty shallow because these are very deep retracements here. Nevertheless, we have lower highs, lower lows. We break above 517, and that's a warning. 517.30, that's a warning that this is negated, but it's not truly negated, this count, until we get up here to past 518.22. All right, then I'll work these projections just a little bit different because we have such deep retracements. These are going to be much lower, so we'll have to work those out in a future video. I'll have some more targets for us, but for now, just know that we should probably see some pretty dramatic moves here with the FOMC, and 1, 2, 1, 2, 3, 4, 5, 4, 5 for a 1. We're looking just for an impulse wave 1. All right, before we get that pullback. So those price targets that we're getting into later on is going to be around that 560 area, 555. So we're looking for a 1, 2, 3, 4, 5 wave impulse move down to there. If it tends to be a 3-wave move, we'll have to recognize that pattern and just know that we'll probably see new all-time highs if we can identify that this is a 3-wave move rather than a 5-wave move, impulse move. We'll talk about that later. That's what I have to show you. What's the VIX going to look like? The VIX, we'll have to pay attention to this. Again, this is, I like looking at it from the daily time frame. Look at that. That's extremely, it's like a spring. And winding up. It resembles exactly a spring. That's intense, you guys. I know that it's starting to expand, and it's a triangle. It's a wedge, expanding wedge. This price action is just deadly. There's gonna be a huge move, and either it breaks down from these lows and it's a massive move down while the market just breaks out to, new highs over and over and over again, or it starts breaking to the upside and past the wedge one of these times. Not just at it, but past it. And much, much higher. Okay. So we'll have to watch the price action. So far, we're making higher highs and higher lows. And we're making, I guess in this case, we're just kind of winding up. We have the high here and then lower high, higher low. So we're coming into an equilibrium to where we get a big move coming up. So we'll see what happened with the FOMC, and if we get a reversal on the FOMC, that should carry us down into much lower levels. And if we have a continuation from FOMC, just watch out. I think we're limited on the upside for the time being. Okay. Thanks for joining us here at Options Center. Have a wonderful day. We'll talk to you soon.